I look at the Dow gold ratio, and then I look at the gold silver ratio. I believe, and I would be dumbfounded if this doesn't occur, we're going to get a 1-to-1 ratio Dow gold at one point. Where's the bottom for the Dow? I mean, that's anybody's guess. I think a realistic bottom for the Dow would be 8,000. Could it be lower? Maybe, but that's probably realistic. That would mean $8,000 gold. And with regard to silver, I'm looking at a potential 10-to-1, at least a 15-to-1. So just do the math. I mean, it's a no-brainer here. What the purchasing power of real money is going to have. It's astonishing.
Precious metals investors embarked on another wild ride this week as downbeat U.S. data and escalating trade tariff threats combined to drive gold prices to fresh all-time highs. Since 2000, the Dow Jones Industrial Average has experienced significant growth, averaging 10,786 points that year, while gold was valued at $280 per ounce. At the time, it took 38.5 ounces of gold to equal the Dow's worth. Today, with the Dow surpassing 44,000 and gold over $2,700 per ounce, only 16 ounces are required. This underscores gold's stronger relative performance compared to the Dow over the last 2 decades. In this video, global expert Gregory Mannarino projects a 1-to-1 ratio of Dow to gold if both hit the $8,000 level. He also anticipates a 15-to-1 gold to silver ratio, indicating significant potential for silver appreciation. While reflecting on the big picture, Manarino criticizes Trump for not signing an executive order to end fiat money, proposing gold revaluation to $50,000 per ounce or even more. He asserts that central banks fear losing control over the population and suggests that it could be possible if people collectively demanded a return to the gold standard. Central banks have been on a historic gold buying spree, snapping up record amounts of the stuff over the past 2 years. A recent World Gold Council survey found that over 80% of central banks plan to continue increasing their gold holdings, so don't go looking for demand to fall anytime soon. Based on fundamentals, Manarino believes top investors are accumulating gold and silver, anticipating a debt-driven financial bubble collapse. He predicts a debt market implosion will spike bond yields, triggering a global stock market sell-off. According to him, central banks and the wealthiest institutions are already preparing for this shift by acquiring gold, with an even greater interest in silver due to its undervaluation. According to the Government Accountability Office, America's debt is expected to grow twice as fast as the U.S. economy over the next 30 years. Now, we present the clips of Gregory Mannarino's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Here's the issue. The system is about control. Central banks would lose their control over the people. I was telling people recently, Trump is signing all these executive orders here in the United States, one after the other. I said, how about signing an executive order ending the fiat monetary system and revaluing gold, let's say, I don't know, $50,000, $60,000 an ounce, and going back to a gold standard won't happen. The issue is we could do it. If we, the people of the world, there's not enough of us, banded together and demanded that this would happen. What we have is a tyrannical system here that is doing nothing but destroy us all. If we banded together and took back the power that we have, we the people of this world, and I refer to that all the time, we could flip the system. I say, we don't want this. I've been urging people to take action, to do something here. Look, I think the smartest people and the smartest institutions in this world are loading up on gold and silver because they do realize, here's how it's going to work. It's too simple to understand. If we realize how the system works, all we got to know really is a basic concept, how cash moves through the system. When you have this mechanism here of vastly inflating debt, this hyperbubbling debt, which I really believe is the greatest threat to the world right now here, and all that's doing is inflating stock markets and pulling cash out of assets it should be going into, gold and silver here, what's going to eventually occur? Think about it. When we get the implosion here in the debt market, the debt market is going to implode. It's the biggest, most monstrous Frankenstein bubble the world has ever seen. But the caveat is, even though it is, there's not enough debt to support the system, henceforth why we're seeing this issue of central banks continuing to inflate.
Yep.
So eventually, we're going to see an implosion of that debt market at the time of their choosing. Right now, they're buying all the debt right now. They're the number one buyers of debt, and they're keeping rates suppressed. And eventually, at one point, we're going to see a sustained, and it's going to be very rapid sell-off in the debt market, a spiking of bonds yields around the world. All the benchmarks that's going to put enormous pressure on the stock markets of the world. And as I tell everyone, currency doesn't fly to money heaven, it doesn't grow little money wings and just fly away. It's going to move. It's going to just move into another reality. In my best I can't imagine this is going to go another way. It's going to make its way right into hard assets, gold, silver. And I also believe it's going to make its way into cryptocurrencies as well. But that there's no other way that it can play out. And that's why you've got central banks, the richest people in the world, the institutions loading up on gold. And I'm telling you, they're probably holding more silver because silver is more undervalued. How does Greg Mannarino come up with that number? Very simple. I look at the Dow gold ratio, and then I look at the gold silver ratio. I believe, and I would be dumbfounded if it doesn't occur, we're going to get a 1-to-1 ratio Dow gold at one point. Where's the bottom for the Dow? I mean, that's anybody's guess. I think a realistic bottom for the Dow would be 8,000. Could it be lower? Maybe, but that's probably realistic. That would mean $8,000 gold. And with regard to silver, I'm looking at a potential 10-to-1, at least a 15-to-1. So just do the math. I mean, it's a no-brainer here. What the purchasing power of real money is going to have. It's astonishing. And people really better start bringing themselves up to speed as to why things are the way they are and how the flow of money through the markets goes. It's very simple. These are not difficult concepts to understand.
The Robin Hood of Wall Street, Gregory Mannarino, warns that the financial system is unsustainable and dependent on ever-expanding debt for stability. He advocates for a gold-backed monetary system, arguing that the first nation to adopt it will gain an advantage. However, he cautions that central banks are devaluing currencies through suppressed interest rates, driving up living costs. Historically, the gold standard did not work well in the United States, and it does not work now. Proponents of the gold standard, including Project 2025, argue that the gold standard reduces inflationary risk by limiting the printing of money, limits a central bank's ability to bail out financially distressed institutions, and hence reduces risk-taking, eliminates any political motivation to follow a certain discretionary monetary policy, and lessens economic cyclicality due to a varied money supply. Goldman Sachs analysts reiterate their bullish call on gold, saying to go long gold as uncertainty looms about U.S. President Donald Trump's tariff policies. Despite these concerns, Manarino expresses frustration that people are not taking action. He urges individuals to bet against the system by holding gold and silver, which he believes are the best assets to preserve wealth in the face of financial instability. Let's get back to the interview.
They're not on our side, none of them, as far as I'm concerned. But you're absolutely 100% right. I've been screaming from rooftops for I don't know how long that we need to return to a constitutional money system or a gold-backed system here in the United States. And of course, this would be beneficial to the people of the world. I said many times that the government that does this first, that returns us back to a system exactly as you are describing, is one that's going to win. We need to take down these institutions, these central banks, and we need to get rid of every single one of these politicians from the top down and replace them with people who actually understand the system, how it needs to work from the bottom up and not from the top down. But unfortunately, this issue of global debt, we're going to see this accelerate here moving forward on a grand scale because the system, as you know, is debt dependent 100%. The only way you can keep the illusion going, and it's an illusion that it's functioning, is to steal more purchasing power away from the currency. And as central banks should devalue it via the mechanism they're using right now is artificially suppressing rates here, emergency monetary policy, better known as quantitative easing. People don't hear these words anymore. Central banks are now as the number one issues and buyers of debt. They're keeping the system afloat via this mechanism, and the people of the world are paying for it, literally paying for it with this issue of the skyrocketing cost of living and the rapidly depreciating standard of living. And that's just the way it's going to go. There's no other way. And again, the mechanism, just to keep it going, they must continue to inflate it. It just can't stop until it does. And then I believe that's a moment in time that probably isn't too far off, although I would never have expected it's gone on this far. But the people are not going to stand up for it. There's nobody in the streets, at least here in the United States. Nobody understands. I mean, look, we're talking about some very basic stuff here. And people just don't see it. They don't get it. I tell people, look, I understand that maybe this stuff seems complicated, but once you start looking into it, let's say this particular talk that we're having, okay, maybe this sounds a little bit over the top to some people, but listen to it again deeply, understand the system, realize that we have this fiat, or so mote it be by decree, a system here that is debt-based. meaning that it cannot function without the ever expanding debt on an exponential scale just to keep the system where it is. It can't stop. It can't be linear. It must expand and expand and expand into infinity. And the downside of this is obviously currency purchasing power destruction. People say something to me, okay, Greg, well, we're seeing all this going on, and why are the prices of gold and silver not going up? Because it's pretty simple. Cash seeks yield. We all know that. Cash always seeks yield. The mechanism here, very simply, is we're seeing doorways being deliberately open and cash moving in through those doorways. What am I talking about? Artificially suppressed rates, currency devaluation opens up a doorway for cash to make its way into world stock markets, which are near record highs. Meanwhile, the world economy is contracting at its fastest pace we've ever seen, and people are being destroyed. So the mechanism here is cash is coming out of assets, let's say gold and silver, not coming out. They're rising, but they're not rising anywhere near where they should actually be. Why? Again, cash seeks yield. Going into risk assets like the stock market, that's just the whole thing is engineered to do. When a central bank gets into the market and starts artificially suppressing rates, so you have a president here, Donald Trump, demanding that not just the Fed cut rates, but world central banks cut rates, it opens up a doorway for cash to make its way into the stock market. So it's got to come from somewhere. It's not infinitely divisible. We all know that. So you're seeing this crazy movement here with cryptocurrencies as Trump is now transitioning us into this crypto system here, which is just the forebearer of the tokenized system, which I believe everyone knows is already coming as a method of destruction and control for the people here on an epic scale, unfortunately. But people are going to sit back and let it happen to them. They're not doing anything about it. And that bothers me. It makes me freak out, honestly. I want you guys to wake up here. But with regard to holding on assets, come on, this is a no-brainer. You bet against the system. You bet against the debt by holding gold and silver, my favorite two assets on the planet Earth.
Gold has seen solid gains this year, up 12.5% year-to-date, and is expected to continue rising toward 2030. Factors such as actions by BRICS countries and policy shifts by the U.S. government and the Federal Reserve support this trend. Given the growing global debt crisis, do you believe a return to a gold-backed system is inevitable? Drop your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.